Hi, good morning. It's Jovi Overo from Beta 2 in London. It's the 8th of September 2011 and the time is now 10:56. So yesterday the equity market surged higher. Those gains were also matched by the industrial commodities. Bonds remained largely unchanged and the US dollar remained firm. Today we have important economic releases by way of the Bank of England and also the ECB. President Obama also speaks later on today as he unveils his grand plans for the US job sector. There are high expectations as to what he may come up with. Now there are suggestions that the size of the package could be upwards of $300 billion US dollars. We also have the Fed Chairman Ben Bernanke due to speak later on today on the US economic outlook. Now, as I've mentioned earlier, the equities markets moved higher. This is due to expectations that policy officials in major economies are considering further action as to how they can support their ailing economies. Now, this saw, for example, the FTSE 100 up by more than 3% yesterday. The DAX, which has taken the battering, also up by over 4%. Gold, now that dropped sharply. It briefly touched 1800 after hitting the high the day previously of 1921. Over the last couple of days or so, there has been evident softness coming from the great British pound sterling. And now with the Chancellor sticking to his guns on his fiscal consolidation, the bank considering additional asset purchases and the economy in dire straits, it's little wonder that the UK economy and the pound is under severe pressure. Now last month, with regards to the BOE minutes, there was a notable shift in the tone of their minutes. Now for example, there were no more votes for a rate increase, and there was more widespread discussions on the relative merits of QE2. Now in my opinion, I don't think the BOE are ready for QE2, but this meeting I think will see further discussions of the merits of further gilt purchases. Now with regards to the Swiss National Bank, as I'm sure you can imagine, I'm pretty sure the Swiss exporters are ecstatic with regards to the intervention. They've also welcomed a weaker exchange rate and also the commitment of the SNB to protect the 1.20 euro Swissy handle. Now the SNB, I think, will also be exceptionally pleased with the fact that its shock and awe strategy has had the desired effect, i.e. the Swissy has now remained above 1.20 and is currently staying above that handle. Now traders are not yet prepared to test the resolve of the Swiss National Bank, to name a few. However, many of these traders will be licking their chops as to the hammering they took with their huge exposure to long Swissy trade. Many investors currently are now reassessing if the Swissy is an attractive safe haven. Bear in mind that the central bank has now committed itself to print money all day, all night and over the weekend, and this I feel will run the risk of generating high inflation over the medium to short, so over the medium to long term, which is going to dilute the value of the Swissy. The SNB has already flooded the local monetary markets with liquidity, resulting in negative short-term interest rates. Now, if interest rates remain negative and there's little prospect for currency appreciation, investors need to be extremely bearish on other major currencies in order to justify holding the Swiss franc. Now suddenly it seems the Swissy has ceased to be a one-way bet. So as always, for more in-depth news and market views, please as always log on to Beta 2's website. As I'm sure you are already familiar with, it's www.beta2.co.uk. Thank you.